first get the board comfortable with having a separate entity where we would house R&D, sell products, buy products, right? It's definitely different than the operations of the credit union. Having the board be comfortable with the financial aspect of doing that.
On this episode of Behind the Vault, we get a deep dive from one of the most innovative credit unions out there. We're talking to April Clobes of Michigan State University FCU and their wholly owned CUSO, the Reseda Group. April shares with us the background and the process that her team, and the whole board went through to go from being a fintech consumer to developing their own products, to acquiring fintech companies, to eventually forming the CUSO and selling to other credit unions, and then eventually becoming an early stage investor in fintech startups. April shares how they executed this progression and really the secret power they have of being a university credit union in making the whole process work. There's lots of really great valuable here. Enjoy the episode. With us today is April Clobes. April, thanks for being with us.
Thank you. Appreciate the opportunity to be on this show.
So it's very rare that you see a credit union or a community financial institution make the leap from being able to do productive partnerships with fintechs, being a consumer, to then being a provider, through a CUSO or other organizations, and then finally making the leap to being an investor in startups and bringing in solutions that don't exist today. So you have a very unique perspective on this and, take a unique position in the market. So I think we start with a little bit about get the history there, getting to that point and why this made sense for the credit union to go that route.
Yeah, absolutely. We have a short history, so I'll try to keep it brief. The Reseda Group is our CUSO holding company. We've been operating that since 2021. It really came from the history of our credit union is we did a lot of technology development in-house ourselves. And when we did that, we made unique home banking applications, website integrations, really had that expertise in-house. And at points in time, there were options for us to maybe other people want to buy the technology. So we start looking at how will we sell this? And the CUSO path is the way to do that. So we start with that plan in 2019 that we will look at what we have created and see what the appetite for it is in the marketplace. Then, we have a lovely global pandemic, which paused some of that work because we had to pivot credit union operations. So we circle back around to that because also in that time, we started before the pandemic, right? We were at a lot of credit union industry type of events, a lot of technology driven events, and seeing new fintech coming into the marketplace. And in 2019, 2020, credit unions were still fintech partners are our enemy. And, they're competing against us. They're taking membership, they're taking deposits, they're doing loans, all the things. And then there was like a slight turn of tide in how people thought about them, as really we needed to partner because we could no longer, at least in our credit union, right, create competing technology fast enough because they were able to niche into different segments of our membership. So we started looking at how do we partner with this technology versus self-create. And so what came out of that was if you start talking to the fintechs, they all needed, investments, and we hadn't done investments and we didn't have a plan, or, that wasn't in the first circle of what we were doing in Reseda. But then we started really evaluating how would we be an investor instead of just someone who makes product and sells into the marketplace. So we actually today have done both of those things, and then maybe a third tier of also purchasing what I would say our suppliers downstream. And so now Reseda Group has Reseda Investments. So those are the fintech partners that we wanted to work with at the credit union that we have an investment in. We have Reseda Products, which are the products that we have created that we have to market to sell. And then we have some wholly owned subsidiaries that used to be like a credit union supplier in that portfolio as well.
So, just to talk a little bit about scope, maybe. So when
Yeah.
you started this, it was around 2019,
Yeah,
and
that's
this
when we
was
presented to our board. Yeah.
okay. And you were just under about 5 billion right then, and from an asset
Yeah.
standpoint.
Yeah.
Okay, about a
Yeah,
quarter.
this
I
was
think I
about
looked at
right.
the numbers. About a quarter
Yeah.
million members. So that's like the size of institution that's executing this, which I guess from a credit union is big, but from a multifaceted
Right.
organization that has this kind of omni-channel approach for how you're bringing
Yeah.
solutions, not so much, right? From I don't I bet you didn't feel like you had a ton of resources that you had at your disposal at that
No.
point.
Right. It's also funny. I think when you look at credit union industry, so, there's over 4,000 credit unions. We're generally number 43 in asset size, and that makes us a large credit union. And then I've been in like panels at the Financial Brand Forum, and it's almost kind of ironic because they turn to me and say, as a small institution with limited resources, how do you make this happen? Right? Because I'm sitting next to Ally Bank or JP Morgan Chase or, Wachovia, like, and they look at us, right, as being little resources to be able to achieve what they're doing at a much bigger scale. So I think it's all scope, size, perspective of where you are in your journey.
But at that point, back to 2019, I mean, you had a track record of kind of doing that shift from consumer to builder
Yeah,
from like a financial
yeah,
technology standpoint.
yeah.
So what did that look like at that point? Like how would you characterize your capabilities?
We still have very robust capabilities, and I think that's what's beneficial as well. Meaning we have developed software. We know how to integrate software. We know how to develop an API connection and how to work on, we have always had a team that was responsible for, a UX and UI design experience before they were labeled those things. And so we had the ability to then, what I would say, really identify good technology that was real technology. So we have people who have the knowledge to say this technology is solid, it is safe, it is secure. And then we also have people who can evaluate, does the integration work for our member experience in a positive way? And then we have, dedicated people who determine, is this product something that our members would be interested in having? Because we've done the research to say this product is needed. And then we would have in the past just went straight to let's build it out. And now we're doing a build or buy type of evaluation. And the buy is enabling us to do more solutions faster.
So at that point, to make it distinct from most, I guess, IT organizations that
Yeah,
are more about maintaining, keeping the lights on, kind of a more utility view of it, a lot
right.
more on the vendor management aspect,
Yeah,
particularly from,
yeah,
the half dozen gigantic vendors that the VSM players here. This is getting into, no, we're going to build our own things and build a competence around it from a complete product standpoint versus just the IT or the specific technology piece. As, as you said, having design and product folks, which is different than technical skills. What about on the strategy side from a leadership standpoint? What was kind of required to get you to that point?
for sure. So first, board alignment. We work to demonstrate to the board why we wanted to do these partnerships and then why we would do an investment and then how we would use the product. And so I think there were many facets of first get the board comfortable with having a separate entity where we would house R&D, sell products, buy products, right? It's definitely different than the operations of the credit union. Having the board be comfortable with the financial aspect of doing that. So in the credit union space, I think most people know that, there are limits on what we can invest in a CUSO. We're federally chartered, so that's very well defined. Each state has their own limits on the type of investment you can do. And so we did our math and calculation and we started. So we are just almost 8 billion today. And we at the time, we were in the $5 billion, which gave us like $50 million to work with. We started slow and we asked the board for a portion of what we could do for the cap and deploy it. And so then the board was comfortable because we started at a lower dollar amount. We would demonstrate in our financial modeling if this investment doesn't work, here's the write-off, and here's what the impact to the credit union's balance sheet will be. Here's what the impact to our net worth ratio will be. So everyone understood the scope and size in proportion to the credit union. And so we moved through that with the board that way. Then we would demonstrate the research done that the members had responded. There we have like a member panel who wants to answer surveys, do questions, answer if they would use a product or service. We would survey out to the member demographic that's relevant, demonstrate need. Then we would move into a pilot phase to ensure that we selected correctly. And from the pilot, if that was successful, then we move into full adoption for the entire credit union. And so I think the measured approach with the board created the opportunity for the board to go on the journey, with us. We didn't just do, we're going to invest and then we're deployed. We have many steps in between, and I think that's helpful.
So the investment that you're talking about here, roughly 1% of assets, that's about what you're
Yeah.
shooting for. Is that included like your internal development, your investment for what you're creating yourself, or this is only external assets or positions you're taking?
Yes, that's external asset investment. We then have a separate budget for R&D, which really is for our size, not that extensive. It's probably under $2 million in people's salaries and, testing and setting up environments with tech stack. So yeah, the majority is truly deployed into the how we use that fund to make an investment in a CUSO. And especially since the regulation is tied to your assets that you can invest in a CUSO, we really track to that. And then we use what would have been typically in our, normal operating budget opportunity for an R&D investment, and we utilize that over there. So we have a, create arm that we make things and then we play and test it. And then if it's viable for the marketplace, we'll move it into Reseda products to be sold.
So at that time, you're taking these two streams that you have from things that you build and things that you bought. I guess we can
Yeah.
include investments in there, and validating, I guess, the business model around it internally. Does this solve the need? Do we think there's the adoption?
Right.
And then it's about let's go sell this to other credit unions. That
Yeah.
process. So tell me just a little bit about building that organization out. I mean, how distinct and separate is it? Like, how much overlap is there with
Yeah.
the credit union? How do you begin to build like just a sales pipeline or just like a
Sure.
marketing message as a distinct entity?
Yeah, so it's evolved. So we have a separate board of directors for Reseda Group, which is our CUSO holding company. But 3 of the MSUFCU board members serve on that board, and then we have 4 non-credit union board members on the Reseda Group. So we have some legal separation, some unique thought process with different experience, right? So we have somebody who's at an insurance company who also has a VC fund. So just people bring different experience. We have a professor with a product background. So all of that comes into how we do governance. And then the leadership at the credit union, myself, our CFO, our chief risk officer, chief legal, and then our chief innovation officer all have roles in the CUSO, right? So we have dual responsibility. But the credit union's chief innovation officer has been Maxim, and he serves as the chief operating officer in the Reseda Group. And he has a team of folks that are responsible for marketing, sales, and product, maintenance and keeping the product up to date based on client integration and implementation requests and needs. So we have a team of folks that work solely for Reseda, making sure that those things happen and are met. In the sense of when you go to market to serve, as now you're the product that people are buying is very different than being the credit union who is the purchaser. So we want to make sure we serve as a good vendor partner, and all of our customers are credit unions, right? And so we work through that process. In terms of the pipeline, we hired someone who had credit union sales experience, so he knew how to market into this industry. He had contacts and so forth, and he's been leveraging those relationships, and we have a pipeline, and they work a pipeline of sales just like all the other, I would say, technology partners.
So a big part of this is the partnership, the relationships you have both. If we want to think of it as like almost like supply chain, right? Your
Yeah.
inputs being the fintech partners, and then the Receda's ultimate customers, which I guess technically would include the credit union, correct? Is that how you kind of position that way?
Yeah. Yeah.
Um, so what balancing this kind of very different world on both ends, what's the hard part? What have you found to be difficult, or the thing as you've kind of transitioned and grown into this role? What was really the piece that took the most effort, or maybe was the most risk?
I think doing the sales of our products or the products that we've acquired and, either enhanced or, partnered with some other products that we had in the works. I think the sales pipeline takes a long time. Credit unions are, you know, a slower sales cycle. It's a longer sales cycle. And we also have to make sure that what we have will integrate. Everyone has, a variety of software that you need to make sure you're compatible with, whether, who their home banking vendor is, or their mobile banking, or their core software, to really ensure that all of the relationships that a credit union may have can work with the software that we are hoping to sell also. I think that takes time, and I think people have to really appreciate having the right forecast for your sales, and the time to achieve those results is probably a little longer than people would think.
So what do you do to mitigate that, or what how is it different than say 4 years ago, right? Like
Yeah.
what have you learned? What's I don't want to say secret sauce, but like
Yeah.
what's the big value add, right? From just saying I'm going to pick the right people that have the right resume and put them in there and go. It's like, well, there's going to be more than that from an operating model.
What I would say is, yes, some of it is the right technology and the right software that everyone is interested in at this point in time and knowing what that is. But I also think it is like all new things, new business, new companies, people don't instantly know them. So we've worked to build a great reputation of thought leadership, and having good experience, being able to demonstrate the products and how they have been integrated into our credit union, and demonstrating, real success that we can share in it through a white paper or case study or things like that. Connecting our partners, creating spaces for them to work collaboratively, and having people look to what we're doing in this technology space as new, unique, and innovative. And then they're coming and asking, how do we know what you're doing? How can we see and be exposed to some of that work? And so I think that takes years to build up, and it takes a long time to build a good reputation based upon the body of work that you've put forward. And we're in a good spot for that is starting to reach the tipping point where more people in the industry know who we are, what we're doing, and the work that can benefit them as well.
So I think what's implied there is a process by which you're able to validate the assumptions that go into
Yeah.
a given value prop. Or, I mean, let me use a less insider nerdy term, right? Like, does it really going to work for our
Yeah.
members? Like, does this really add something? How do you go about that, either with your partners or internally with the credit union?
Well, a couple of things, right? Like, so we have some maybe instinctual knowledge that this is something that the members would benefit by having access to, or we've had requests. So first thing that we do is we would go do the market research of our membership to say, do you have this interest? And then we would work with the partner to say, okay, we want to do a limited scope engagement. Step one, pilot, different pricing, short-term contract. Vendor due diligence still very significant, but maybe you're not having access to member data and information. We're going to isolate you in an environment over here, which then allows this to be a faster deployment. We'll take and select to communicate and offer this product to a very narrow group of members that we think are most likely to utilize the product, and then really work to market and promote it there. See if the people like it, if the members use it, if it really vetted out to be our assumption. We give every one of the products that we're integrating in pilot metrics that they need to achieve, right? So we think this level of adoption makes this worthwhile investment for us, or makes the experience validated. So we would offer it to the full membership. So we have, and each of them have varying metrics based on the type of software they are. We don't just have one metric that applies to all of them. It's different. If some things are engagement, maybe those numbers are higher. But if some of the fintechs bring us deposits or loans, maybe we only need a certain balances to change in a smaller percentage to make that a valuable spend. So we do all of that. Then we make an evaluation of, did it achieve the goals that we expected? And if yes, then it goes through a process of evaluation, and then we greenlight it, right? We greenlight it to full credit union adoption. Then when we have full credit union adoption, we go back, same metrics, same measurement, say that that's doing well, and then we try to connect it to other credit unions in the industry to say, here's been our experience. We invite you on the journey with us if it makes sense for your credit union.
So for a pilot like that, you have 300,000 members.
Yeah.
How many are part of a pilot? Like, how many are going to get exposed to something like that?
Yeah. It's going to vary based upon what the product is, in the niche of what could be, but probably initially 10,000 members is a good starting point. You want to have enough to select from that, if only 3% engage, right? The smaller you select to be in your first pool, and then it has to be meaningful to be appropriate to apply the data across the board is fairly representative of what the likely situation will be for a full deployment. So we want to make sure we have that.
And do you find your members are willing participants, I guess, from this standpoint? Because I mean, this is a little bit riskier than trying to go out and recruit somebody new, right? The chance that it's not going to deliver the value, the chance that it might deliver the value, but you're not committing to it. Like, you may withdraw this capability at some point. How do you maybe manage that risk or the reputational aspects of it with your customers?
Yeah.
Or members?
So no, it makes sense, right? So we kind of package the pilots with the members as under the lab at MSUFCU. And so we tell members, right, we're testing, we're piloting, we are asking for your feedback. We've heard you. This is a product that the membership as a whole has expressed interest in having opportunity to, engage with. And so it's very clear when we tell everyone it's a test, it's a pilot, and not all functions and features will work. We communicate that. And then we've turned off pilots and we've said, thank you for helping us make it better, stronger, faster. We're going, silent for a few months while we take that feedback and improve the product, and then we'll have full launch and you'll be first to have access. And then we've also have done where we're not going to move this forward. We thank you, but it didn't seem that we had enough member interest, and we appreciate you taking this, opportunity to test with us. So we do a lot of communication with the members. I tell everybody I don't know if we serve like a university population, right? So my board is also very willing to do this work because they understand research, they understand testing, they understand the longevity of, your research to have real meaningful outcome could be decades of work done in a lab or, in a research, paper. So I think our membership as a whole is a little more open to what I would consider research and testing than maybe the average consumer. But we have everyone's family member and stuff as well that are members. So I think it's really important how you package it. And I think we get a little grace when you tell the member this is coming to you from our R&D experience in the lab at MSUFCU.
So that for lack of a better term, brand around this is a lab product
Yeah.
or a lab offering. That sounds like that gives you a lot of cover for this
Yeah.
and maybe mitigates some of that. Wow.
Yeah.
That's a huge advantage to have that and to be able to do it at that scale. Um, so speaking of the board, one of the things that I saw was interesting about what Reseda does is you've obviously done some acquisitions, you've been able to spin out some of the things you've developed inside, but you also take up just straight up equity positions in startups as
Yeah.
partners. And I had seen in a couple of the bios that some of your executives will then sit on boards of those
Right.
companies.
Yeah.
Talk a little bit about that because that's a very different animal than I'm sure your relationship with your board is and how that works and what your role is and how you add value, et cetera, et cetera.
Well, the part is when you're doing, an equity position in a startup, they need to, especially when they're becoming a CUSO. So a lot of the fintechs have to become CUSOs. They had not come to us as a CUSO. So they need to form to be a CUSO, which they need help on that journey, but that's very unique to our industry. So, generally credit unions cannot direct invest unless it's a CUSO. With that comes establishing a CUSO board, and then we would like the board seat with our investment. And almost all of our investments, we do have a board seat. There's one or two where there's enough credit union investors, they rotate the board seats and move towards a more mature model of open election from the investors. Um, but what that does for us is a few things. One, it helps the credit union, I would say, monitor our investment and where we are financially, how that organization is doing. It provides the opportunity to have input onto the roadmap of the technology. In addition, we provide information about credit unions that maybe the technology fintech startup doesn't have, right? They may thought this is a great consumer product, but they really don't have enough knowledge on integration into the banking industry. They don't know how rules, regulations work, what would be important to make sure that this product can be sold and consumed by a credit union and their members. And so for us, we serve as an advisor and helping create knowledge that would make the product even better and stronger. So I think it's a multitude of reasons we really want a board position, but ultimately, of course, we're watching to make sure our investment is well managed, and that they are being responsible with the equity position that we've taken, right? And all the other people's money that they have raised to run the company, right? You can't just say, oh, you just raised, $50 million from credit unions and now it's, you can pay unlimited salaries to yourself and you don't really have to spend the money in the R&D and, you just got to buy out. It's not like that, right? You want to make sure that they're using those invested funds to strengthen the product offering that you want to provide to the membership.
So how do you measure success? There's very well trod metrics about how an investment firm or a venture capital
Yeah.
round would be measured. Is it the same? Is it different? Are you looking at it from the CUSO standpoint, from the Reseda Group standpoint, all the way back to MSU? And MSU is the sole
Yeah.
owner of Reseda, correct?
Yes.
Okay,
Yep.
so you
That
have
is
these like
correct.
multiple tiers of
Yep.
owners that have different requirements, different things that they're expected to tell their
Sure.
stakeholder. How do you manage all that, and maybe where's the tension in that relationship?
Well, okay, so from the Reseda Group, we're looking at investment dollars, right? What's their burn rate? Is it decreasing? Are they improving financially? What's the K1? What's the value of the investment? Are they growing their, ARR or and show, are they having success with how many clients and what their total contract value is to the organization? Those are all things that help improve the valuation, which generates an opportunity for our investment to grow in its own value. We look from that standpoint to see success. Now we've had one exit where somebody we've invested in was sold, and we had 153% return on our investment. That's a great metric, right? Not normal, not going to happen regularly, which is what I share with the board. Um, we look at then what is the value of the investment beyond the investment return. And so sometimes that value is because we're an investor, we have a discount on the credit union using the contract. We have the opportunity to have a higher investment earning or a revenue share. All of those are captured to get a full value of this investment, not just the K1 results from the investment. And then at the credit union side, it is all about the cost of the contract, the adoption, and the metrics that we put in for full deployment. Does it make sense to renew this contract? Was this a performing investment? And then truthfully, right, if we don't see the adoption, it makes being an investor difficult because you want to have the synergy of the product is worth investing in because people want to buy it and use it. And if we're not having that member adoption, then maybe others won't either, and the investment value won't be there, right? So we're trying right now to pick options for investing in spaces that we think the membership will find value in that product or service.
So it sounds like you're able to capture value in many different ways and kind of stack that up. And I think that's really
Right.
unique because you don't really see that from an investment standpoint. So being on kind of the cutting edge, forward thinking of kind of where this part of the combination of credit union and financial services and technology is going, what are you most excited about? Where do you think the biggest opportunity is in the space?
Well, what I've been seeing, and it's kind of fun to be a part of, is I see a lot of other credit unions starting to want to explore with us, meaning others are saying, teach us what you've done because they think there's value that we can also be an investor. And I think having more credit unions invest and more credit unions working together makes economies of scale and makes a greater product available to all of our members so we can compete with the big banks. We can remain relevant as an industry. And I think that's what's really fun and exciting is seeing industry collaboration from the credit union side. And then on the other side, we're seeing our investment partners collaborating together, right? So maybe I have one specific niche of something that I've created in a tech stack and it works. And I was going to go and add XYZ component, but XYZ component is already been made by a different fintech, and they're working to figure out how they can connect together to create the next uh, product or the integrated value, which is also a positive for all of us. When they're working together and they're becoming more efficient, your investment has greater value also. So those things are happening, and it's very fun to see. And hoping that we'll see that culmination at we have a summit in September in Detroit, September 18 and 19. It's called Reseda Summit, where we have credit unions coming to see the technology partners that we've invested in. We have all of our CUSO partners coming doing demos. And then also those CUSO partners are coming in a day early, and they're working to solve problems and collaborate and code together. So you can see the tech partnerships. Then you hopefully in the next 2 days following, we'll see some credit union collaboration come together, and really elevating the technology partnerships to the next level for the industry. I think we're on the, just the brink of the beginning, and it's fun to see.
So, I mean, that would really be interesting as kind of a unique asset class of this type of customer in this, or this type of technology in this type
Yeah.
of market. So for credit unions that are really interested in kind of looking at this deeper and seeing it, is really the summit's the best place to go. Like that's on the ground, see it working.
Yeah. It's smaller, right? It's designed for 100 or 150 people to come together. So it's a little more targeted. It's all credit union specific. The demonstrations, the applications are all focused on this is how it can work in a credit union versus maybe like going to a Finovate where it's, not everything curated specifically for the credit union industry. So it's a very unique experience that we're hoping to deliver to the credit union industry partners.
Okay, great. Well, we'll put links to all of that for people to kind of come into
Thanks.
Detroit and see it. Um, April, thank you very much. This has really been
Thank you.
insightful to learn more about what you guys have been doing and really the success you've been having on kind of really innovating on not just the technology but the business model of what you're doing. So thank you very much for being here.
Thank you. No, our pleasure. Thank you for inviting us to share.